Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, July 24th, 2025, we're zeroing in on Bitcoin, symbol BTCUSD, which has been making headlines with its volatile movements. Let's start by looking at the broader market and recent news surrounding Bitcoin, and for this, we'll start on the one-day chart showing all available candles. Recent Google searches indicate a mix of strong bullish sentiment and some immediate caution. Just yesterday, news broke that Bitcoin topped $123,000, signaling incredible momentum. Adding to the bullish narrative, major corporations like Tesla have seen their Bitcoin holdings surge, with a reported 30% rally in Q2 alone, pushing their BTC value to $1.2 billion. We're also seeing significant institutional embrace, with Block joining the S&P 500 as a Bitcoin holder and Fidelity amending its Bitcoin ETF to enable in-kind transactions, which significantly boosts institutional efficiency. However, despite these positive catalysts, the current market sentiment is somewhat divided. The latest reports from Bitcoin.com news show BTC trading around $118,664.94, down about 1.07% over the last 24 hours. This indicates that while the overall trajectory is upward, Bitcoin is currently facing selling pressure near the $120,000 mark, as suggested by Cointelegraph. The altcoin market, in particular, has seen substantial liquidations, triggering over $200 million in losses and pushing Bitcoin's dominance back past 60%. Now, let's correlate these news events with our daily chart data for BTCUSD. Looking at the long-term trend from March 2024 through mid-2025, we observe a consistently strong bullish uptrend. Bitcoin has made a remarkable ascent from the low $60,000s, clearly demonstrating sustained buyer interest and accumulation over many months. A key price level we've consistently observed is the $60,000 to $62,000 range, which acted as strong support in April, May, and June of 2024, holding multiple dips. Another significant zone of support emerged around $90,000 to $92,000, which provided a floor for several pullbacks in late 2024 and early 2025. The previous all-time high from early 2024, around $73,000 to $74,000, once broken, also transitioned into a support level, confirming the strength of this bullish momentum. To really understand the recent price dynamics, let's narrow in on the daily chart from October 1st, 2024, through July 23rd, 2025. Here, we can clearly see Bitcoin's parabolic move, accelerating significantly from the $60,000 range to break the psychological $100,000 barrier. This period saw several strong, high-volume candles, indicating aggressive buying, consistent with the positive news on institutional adoption. The rally culminated in Bitcoin hitting highs around $120,000 and even touching $123,000 as reported by CNBC, setting a new all-time high. However, as the news suggests, recent days have shown a slight retraction, with the price pulling back from these highs. The current daily candle, closing at $118,761.75 on July 23rd, reflects this immediate selling pressure after hitting peaks. This pullback could be healthy profit-taking, given the significant run-up, or a sign that the $120,000 to $123,000 zone is indeed a formidable short-term resistance. Moving on to the shorter time frames, let's examine the 1-hour chart. It's important to note that the provided hourly data concludes on July 6, 2025, making it slightly older than our most recent daily candle. However, it still provides valuable insights into typical short-term market behavior. In this time frame, we see periods of tight consolidation, characterized by small candles and relatively low trading volume. These tight ranges, like the one we see around the $108,000 level in early July, often precede larger moves. For day traders, these periods are crucial for identifying accumulation or distribution phases. Notice the occasional spikes in volume accompanying sudden price swings, which indicate increased short-term volatility and often define immediate support or resistance levels for intraday trading. Further refining our view, the 15-minute chart, also containing older data up to July 22nd, offers an even more granular look at price action. This time frame is where rapid shifts in sentiment and order flow become visible. We can see how price repeatedly tests specific levels, such as the support around $117,000 and resistance near $118,500 within this dataset. For very short-term trading or scalping, analyzing these microtrends alongside volume patterns is essential for pinpointing precise entry and exit points. Sudden, high-volume candles on this chart often highlight moments of significant buy or sell pressure, which could signal a potential breakout or breakdown from a consolidating range. Always pay attention to the interplay between price and volume. Strong moves on low volume can be misleading, while high volume confirms conviction. To recap our analysis for BTCUSD, several key price levels stand out. Immediate short-term support to watch is around $117,000, represented by the recent low on the daily chart. A more robust support lies in the $115,000 area. On the upside, the primary resistance is the recent all-time high zone of $120,000 to $123,000. Looking at unbiased predictions, a sustained break above $123,000 with strong volume would be extremely bullish, likely leading to the next price target of $130,000 to $135,000 in the short term. The likelihood of this occurring is moderate to high, especially if positive macroeconomic signals continue and institutional inflows persist. Conversely, a breakdown below $117,000, especially if followed by a drop under $115,000, could signal a deeper correction back towards the $100,000 psychological level, or even the $90,000 key support. The probability of this scenario is moderate, especially if profit-taking accelerates or new negative regulatory news emerges. Beyond technical levels, keep a close eye on upcoming economic data, central bank statements, and any further news on Bitcoin ETF developments, as these will be critical catalysts. Always remember to manage your risk and stay informed. Thank you for watching Explain the Charts, and we'll see you in the next one.